Hi, I'm Kerry Wagoner. My wife Stacy and I are both certified public accountants in Ocala, Florida. My clients often ask whether it's better to deduct their actual automobile expenses or to use the standard mileage rate. Well, the answer depends on several factors that differ from taxpayer to taxpayer. You may deduct the greater of your actual business expense or the amount provided by using the standard mileage rate. The standard mileage rate was 51 cents per business mile for the first 6 months of 2011, but was increased to 55.5 cents per business mile on July 1st. If you use more than one automobile in your business, you must compute the actual business expense for each vehicle. In order to determine your actual business expenses, you need to know your business use percentage. You will need the number of business miles that you drove during the year and the total number of miles that you drove during the year, as well as the total commuting and personal miles. Your business use percentage is determined by dividing your business miles by your total miles. I will explain how to determine your business miles later in this video. Your actual business expense is the business use percentage multiplied by the total expense of your vehicle for gas and oil, insurance, repairs and maintenance, tags and licenses, car washes, detailing, and depreciation. The business portion of tolls and parking, vehicle loan interest, and vehicle personal property taxes are deductible regardless of whether you use the actual expense or the standard mileage rate method. The standard mileage rate cannot be used if accelerated depreciation has ever been taken on the vehicle or if Section 179 expensing was claimed on the vehicle. There are many complex rules and limitations pertaining to depreciation that will not be covered in this video. If you are utilizing the actual expense method, you should familiarize yourself with them. The topics not covered are accelerated depreciation versus straight line, Section 179 write-off, mid-year and mid-quarter conventions, luxury vehicle and SUV or heavy vehicle limitations, the tax credits available for some vehicles, whether to lease or purchase, and how to maximize actual expenses by using two vehicles. Now that you know that you need to determine how many business miles that you drive, what qualifies as a business mile? First, do you have another job or is a home-based business activity your full-time occupation? If the home-based business is your only activity, all business stops from your home are business miles. In this example, assume that you go to the bank on Monday, had a meeting on Tuesday, went to the post office on Wednesday, had a meeting on Thursday, and spent Friday passing out your company information to prospects. These are all business trips. Therefore, you should make your personal stops within those business trips so that they are included in your business miles and not separate personal miles. If you have another job, the direct commute from your home to your job is not business mileage. You should make a business stop prior to getting to your job so that the mileage from your home to the business stop is business mileage. Visit a customer or prospect that is farther away than your job in order to convert all your commute to business mileage. In order to deduct automobile expenses, you must keep a mileage log. At the end of the year, you must know the total miles driven and the business, commuting, and personal mileage portions. There are three methods of maintaining a mileage log. You can maintain a daily log or use one of the other two acceptable methods. A 90-day log can be maintained and then annualized, or you can maintain a log during the first week of each month and then annualize that. The mileage log should include the date, it should list the appointments, the mileage next to each, and the total miles driven each day, as well as the amount of commuting and personal miles driven. Good luck in your business.